All right, guys, I am back again with another video. And in today's video, I want to take time to talk to you and show you how you can catch big moves when trading the market, mainly the futures market we're talking about. But this also works with other markets, and I'll explain to you why. But there's one tool that I use, and that one main tool is what really I rely on to catch these big moves. So if you want to know what that is, just stick around and you will find out shortly. All right, guys, so here you are. You see my disclosure statement. Just want to make sure that you understand that this is for educational purposes only. Also, do know that I am not a financial advisor, so anything that I do and talk to you about today is for educational purposes only. So if you decide to take upon yourself to do anything that I'm showing you today, please do consult with your own personal financial advisor so that they can help you to understand the relevant risk factors when trading the markets. All right, guys, please do read that and understand that. As usual, before I get started, I always like to do one thing. I like to give you a word from the Lord. So today, I'm going to be reading from Luke 13, chapter 13, verses 1 through 5, which state, "Now there were some present at that time who told Jesus about the Galileans whose blood Pilate had mixed with their sacrifices. Jesus answered, 'Do you think that all the Galileans were worse sinners than all the other Galileans because they suffered this way? I tell you no. But unless you repent, you too will all perish. Are those 18 who died when the tower in Siloam fell on them? Do you think they were more guilty than all the others living in Jerusalem? I tell you no. But unless you repent, you too will perish.'" So guys, basically what this passage is talking about and discussing is really a broader perspective on divine justice and mercy, suggesting that suffering is not always a direct result of personal sin, and that God's way of dealing with sin and repentance is more complex than human understanding of retributive justice. So the Galileans were presenting a sacrifice when they were killed by Pilate. So that sacrifice could have represented the act of worship and devotion, atonement and repentance, gratitude and thanksgiving, covenant and relationship, and also a symbol of faith and trust. So based on that, we can justify that the Galileans were very religious and followers of Jesus. So the passage underscores the concept that all humans are sinful and in need of repentance, not just those who suffered or those who do suffer in a visible and dramatic way, such as the Galileans did. The call to repentance is a personal one, so each individual is responsible for their own relationship with God and must seek repentance to avoid their spirit being at risk of separation from God. So in summary, just understand that tragedy is not a direct punishment for sin. Rather, the direct punishment for sin is eternal separation from God. This is the direct punishment for sin. So we can avoid that eternal separation by accepting Jesus Christ as our Savior and acknowledging that He died for our sins. Therefore, we need to have a broader understanding of sin and repentance and recognize our need for God's mercy. God bless you, my brothers and sisters. Hope this helps someone today. All right, guys. So also, before I get started, just want to make sure that you do know who I am, what I'm about, and understand that I've been trading the markets for roughly 20 years, a little more over 20 years. But you could see on my YouTube page that my first video was like 13 years ago. So at least you know I've been doing this for at least 13 years. And I'm not just one of these fly-by-night guys that you catch on YouTube, just decide to talk about trading and show you stuff, because I've been doing this since 13 years, okay? So that lets you know that I'm consistent. And since I'm still doing it, it must be something that I'm doing successfully, right? So how can you trust and know that what I'm showing you is correct and that I'm good at what I'm doing? Basically, I can show you that I past Bullinox accounts for trading for funded accounts. So trading with these prop firms, you can see Bullinox is one of them that I use, and I passed that and have a funded account with Bullinox. I have funded accounts with Apex Trader Funding using Rhythmic, and I also have one with the Tradeovate account with Apex Trader Funding. Here you can see my payout from Bullinox. Here's one payout. Here's another payout from Bullinox. Also payouts from Apex, as you can see here, and another payout, and another payout. All right, and currently my account with Bullinox, one of my accounts, you can see 55,000. What's that? 333, whatever. Basically, I had a $50,000 account, and I increased that up to 5,000 right now. And also, this is after taking money out of the account 3 times. So I still have profit in my account. So I suggest that you, if you're going to trade with these prop firms, that you get a $50,000 account. It's just the perfect size. And also you could see on my account that the upstream here, how my account progressed. You can see that it's constantly moving higher. There are some dips in there, but you can see it's not up and down all over the place. It's steadily trending to the upside, and that lets you know how I'm trading the markets. So if you decide that you want to learn anything from me, you want to trade with me, all you got to do, guys, is visit my website. Go to www.thetradersvibe.com, and when you get there, just either you can check out the free videos that I have, or you can go to the blog and check out my blog, and you can also go to the events page. This is where you will be able to trade with me. When I have live events, you will see them listed right here on this calendar. As you can see in the lower right hand side, we had a live event today, and if you would came into my website today, you could have clicked that and you would have been able to join us for that live event. That live event was pretty much talking about what we're talking about today. And if you're a member, you'll see this page, which is a little bit more different, because on this page there's going to be things that will be listed that won't be on the free events page. So if you're a member, I suggest you log in fully and check what's going on then. And then if you guys want to decide to get an account, if you want to get an account with Bullinox, please do use my code Chaos90, give you a 90% discount. And I suggest, again, using that $50,000 account. And I'm going to tell you guys, I'm going to put a video out about why I think Bullinox is better than Apex. First of all, the main thing that makes them better is that they have Zelle. So you can apply for your money. Once you make enough profit, you can apply for your money on that Friday, and you'll have that money that Tuesday. Well, I get it Tuesday anyway. It's usually going to be the Wednesday, but they Zelle that right to me, and it's boom, right in there Tuesday night around 10 o'clock. I have that money. Don't have to worry. But with Apex, it's weeks and almost like a whole month before I get that money. And it's a pain in the butt the way Apex does their payouts. So that's why I suggest Bullinox. And another reason why I suggest Bullinox, and I'll talk about this, is their drawdown. All right. So they have this drawdown where it's $2,500 on a $50,000 account, and it's a moving drawdown basically. And then the other thing is they also have on Bullinox that same drawdown, but Bullinox also has profit drawdown, which means basically their drawdown is the end of the day drawdown. So it's what you made at the end of the day they count you for. So if you lose 800, but then at the end of the day, it's only showing that you lost 350. That's what you're going to be shown for your drawdown is. All right. It's not going to be 800. It's going to be 350. So that's a big deal. But currently I don't trade that one, but it is one, and it's a little bit more expensive. But again, that's one of the better things with them. So if you decide you want to trade with Bullinox, again, use my code Chaos90, get you a 90% discount. And if you want to stick with Apex, then you can use my code again. That's going to be ZRZHFEXM. Please do help me out there using these codes, because I'm not asking for anything from anybody. I'm not selling any courses to anybody. I mean, I do have courses and all, but I don't push my courses to anybody. So the way that I really want to be able to take care of anything that I'm doing is from trading the market or else from any affiliates that I may have. So trading the market is the main way that I'm gonna make profit in the market, and that's why you don't see me on YouTube as much, because for me, trading the market, you have to be totally into it. You have to be focused, and I don't feel like you can just trade the market and not be 100% focused and have all kind of distractions. And to me, distractions are when I have to keep talking to people and I miss out on trades and I'm not really focused on what I need to be doing. So therefore, that's why you haven't seen me a lot, but I am constantly trading. So therefore, please do understand that. So let's get into this thing that we want to talk about. All right. Let me tell you and show you what I am going to be talking to you about. All right, guys. So this is it. This is the NYSE tick, which is what I want to talk to you about. So the NYSE tick is a market indicator that represents the number of stocks trading on an uptick minus the number of stocks trading on a down tick at any given moment. So a positive tick value indicates more stocks are trading on upticks than downticks, which is a representation of the net buying pressure. So a negative tick value means more stocks are trading on downticks, representing net selling pressure. All right, so do understand that. So an uptick is a trade that occurs at a higher price than the previous trade, and a downtick is the trade that occurs at a lower price than the previous trade. And the tick value is the net difference between the number of stocks on upticks and those on downticks. So for example, if 300 stocks are on an uptick and 200 are on a downtick, the tick value would be positive 100. Simple math right there, right? So the NYSE tick is a breadth indicator, and this means that it gauges the overall market sentiment by measuring the number of stocks participating in a move either up or down. So the difference between the NYSE tick and other indicators such as the RSI, MACD, and stochastics is just that the NYSE tick measures the overall market sentiment by evaluating the number of stocks participating in a move, whereas the RSI and MACD and stochastics, they focus just on that individual asset that's on your chart. All right, so the NYSE tick provides a macro view of the market sentiment, whereas the RSI, MACD, and stochastics provides a micro view focusing on the price action of a specific asset. So how does the tick work? The tick is based off of executed trades, not orders. So it only considers market orders that have been filled and executed. It doesn't take in representation of limit orders. It doesn't represent limit orders because limit orders are resting orders. They're not orders that have been executed yet. All right, those limit orders could be there now and gone in a minute. Maybe the person picks them up because they're trying to spoof people and so forth. And that would be one thing. So just understand that it's based on real time difference between what's an uptick and a downtick at that precise moment. So we'll talk about the tick levels. You can see them here. You could read this if you want to pause the video and read this. But I'll talk about this as we get on into the slides a little bit more. We'll talk about more about the relevant and important levels, and I'll show you how to find other relevant levels. So the positive tick indicates more stocks are trading on upticks than downticks, suggesting that you have bullish sentiment and potentially higher demand for stocks, and vice versa with the negative tick. That indicates stocks are trading on downticks. More stocks are trading on downticks than upticks. That suggests bearish sentiment and potential higher supply of stocks. So it shows you immediate supply and immediate demand. And that could be short term. It's very short term. It's not going to be like an hour of supply and demand or whatever. It's showing you the immediate supply or demand coming into the market at that time. And that's when you have to take advantage of that. That's why this is a short-term indicator that you can take advantage of right off the bat. It's a leading indicator, and I'm going to talk about that and show you what I'm talking about. So while it gives us indication of immediate market sentiment, it's an indirect measure of the supply and demand, as pretty much as I mentioned previously. All right, so here's ways that you can use the NYSE tick. You can use the NYSE tick to identify momentum, and I'll show that on the charts. You can use it to fade exhaustion moves, to monitor divergences. We'll talk about that. And for internal support and resistance, and we'll talk about that. So the tick and the ES correlation, futures correlation, couple things. You can see here, lead lag relationship, magnitude relationship, intraday correlation, and the event correlation. All these things are correlations for the tick and the ES on the futures market. And you can pause this and look at what I'm talking about here. So the tick support and resistance. Previous extreme tick levels can signify support and resistance levels. Tick range extremes can signify support and resistance levels. A failed tick move can signify support and resistance level. And volume at tick levels. This is one that I don't use a lot, but it's probably one that I probably need to learn how to use more. But volume at the tick level can signify support and resistance zones, okay? So the tick during the market open, the tick reading is generally not considered reliable or meaningful during the market open period. And that's like between 9:30 to 10 or so. But once it calms down, then it's pretty good. And the reasons being is because the price inefficiency at the open, auction open dynamics, order flow imbalances, news and data reactions, the roll window, and so forth. These things cause the tick to be considered not reliable when it first is open. So I don't really count on it the first half hour of trading the market. So what you're looking at here is your tick. All right, this is the tick that we're looking at. The tick here has levels. You could see this red level, 600, negative 600, and this blue line is 0. Up here I have some zones between positive 800 and 1,000, negative 800 and 1,000. And we'll talk about those zones shortly. So a lot of times you'll look at the tick and you'll see like pretty much here you could see the ticks trading above this 0 level. This lets me know that the market's pretty bullish, all right? As it's trading above that level, never really closes below that 0 level, especially in this area. So between this time frame, we pretty much know it's strong. The market probably got a little weaker here, but that's how you can determine how the market is, which way it's trending, and so forth. Another thing about the tick that you can look at, like I said, as it stays above this level, this 0 level, it lets you know that it's bullish. And if it stays below that level, then again, you could see that the market's pretty bearish. Stays below that 0 level right there. All right. And then it's finding support at certain levels. So it's really finding resistance at this 0 level. And it's basically finding support right around this level between the negative 800 and the negative 1,000 level. Therefore, I can use these levels pretty much like we were talking about internal support and resistance. This is the internal support and resistance levels for the NYSE tick. And if you look at your chart, you'll probably see the same things where your chart is finding support as the NYSE comes down to this, as the tick comes down to these levels. All right. And then as you're trading the market and you come up on support and resistance level, if you hit a resistance level and the NYSE tick also comes up against this resistance level of this 0 level, then you can say, hey, this is a possibility for me to take a trade. Now, it's not always going to be finding these levels. These are the main levels that we have, the 600, 0, positive 600, positive and negative 800, and negative and positive 1,000. Those are the main levels, but the market's it could make its own level, and I'll show you what I mean by it can make its own level. All right. So you could see the market pretty much honoring on this chart. Really, it started honoring this positive 600, and all throughout it's honoring this negative 600. Now, it's not exactly honoring this positive 600. It's more so honoring this level, maybe positive 400 or something like that. Whatever that is, 400, 500. It's honoring this level. You could put a line on your chart and you'll see. So now you'll know that as the market pushes up to that level, and then if it rejects that level or you see price action, you can short that level. So we're not really talking like this tick will make a price action move because it can show you rejections and so forth. And it's also going to show you when positive ticks come into the market, or negative ticks. So when I see this, couple things that it's telling me. Number one is basically just when I look at this candle here. First of all, it's above the zero level, so I know more stocks are positive than negative. Therefore, I know there's an uptick here. So you see more upticks than downticks. So we have positive upticks, but we reject it. Look at this. We couldn't close where we pretty much moved up to. And then the next candle, what's the next candle? The next candle is bearish. So this lets me know possibly if I'm at a resistance point and the market comes up to that level, and I'm looking at my chart and I get this on my chart, I'm knowing that there's possibly a nice opportunity to short the market at that point. And I'll show you more of that as we move through the market, through these slides here. All right. So the extreme levels, these extreme levels are what you're going to be really looking for sometimes too, because they really let you know when there's possibly a good reversal coming into the market. Like the market hit this extreme right here. This was the positive 1000, pretty much came here, got it there and here. And then you came down to this negative 1000 level. When you come off of these levels, you're pretty much going to see a reaction in the market. So we got to the negative 800 here. Pretty much looks like the market was honoring that level throughout the day. And every time it got down to that level, probably seen the market move back higher. Here it went to the extremes down here, these levels right here. And probably at that point, you see the market move to the upside. Probably at these levels here, you see the market move to the downside. So I'm going to show you how to correlate that with trading on your chart. All right. So let's continue to move through these slides so we can get you to what you want to see. So let's look at how this takes place. All right. What I have on my chart and the way I trade this, there's a couple ways I trade it. One of the main ways I trade it is to have these two moving averages on there. One is a 9-period moving average, and the other one is a 20-period moving average. All right. 20-period moving average. And it makes these, and I'm using the CMAs, which is basically the colored moving average. And I'm using the EMA. I'm not using the SMA. All right, exponential moving average. So when these are green, I know I'm long. And what I look for is the market to pull back to these levels. Here it pulled back to that level. And what happened? First of all, the NYSE tick was honoring this level throughout the day so far. So that level, when the market pulled down here, honored it, pulled back down here and honored it. And when it pulled back there, the price was also within that zone that I'm looking for to take a trade, between that 920 zone. And that's where I took the trade. First of all, the indicator showed, the tick showed me earlier what was going to happen with the market, or what could have happened with the market, because right here it started to already show positive upticks prior to the market showing me anything. The tick was already showing me, and then it closed above zero. I'm in the trade, looking at volume also to get me in there. I'm in that trade. All right. And then the next one here pulls back into that zone. This really signified we had this shows me a big uptick. All right. So a lot of demand coming into the market at that point. Also would be looking at my volume, which isn't on the chart right now. But I look at them two things and look at where my location is and look at what the direction is. And I'm going to take a long right here. All right. And you can see what happened there. So that's basically how I'm trading this thing. Then you can see again right here. So previously the market was honoring this level. Pretty much that level there around 400, negative 400. Why? Because we just came off of a downtrend, and we're just starting to move to the upside. The market move to the upside wasn't as strong yet, as it kept honoring this level where it hit here and where it hit here. But then it started to get stronger, and instead of honoring that level down here, negative 400, it now started to honor that zero level and stayed above that zero level. Remember I told you that if the tick is staying and trading above the zero level, then more than likely you got a bullish market. at that point. And from there on, you could see we had a bullish market all the way through. It showed me that all the way through here. And that's how you understand which way the market is going and where the internal support and resistance levels are using that NYSE tick. Now, when I'm using the NYSE tick, even though we have these levels, I want these levels, every time I get these support and resistance levels, to line up with this level, the 9 and 20, the 9 and 20, the 9 and 20. So this one didn't go inside the zone, the 9 and 20. This one didn't either. This one just touched the zone. These two went inside the zone. So those are lining up, and I'm able to take my trade long. I know I have that support. You could see how many times it hit off that level and honored it. Definitely you can tell that we're above that 1,000 level here. Probably going to see a correction. If I was in this trade, I would know that about this time it's time to get out of that trade. And here you could see the market drop as we hit that over that 1,000 level, and the market did drop. All right, so that really definitely shows you you could counter trade that, but I usually don't counter trend trade. I trade the direction of the market. So again, you could see the same things taking place. Not going to really show every single trade, but you can see how it's lining up. Let me talk about it a little bit so that you can understand what's happening here. Basically coming down to my 920, and when it does, I get this. And you could see now, maybe at first you don't know, but now you could see where the support level is. And then that level changes a little. Looks like it's honoring the 0 level. Then we get a big correction. It's where people think the market changed direction. But look, it came down to that negative 600, and it honored that level and moved higher. And then we came back down to this level and moved higher again. So that's where you're able to take your trades. You want to find where the market is honoring, what level the tick is honoring, because it's not always going to be the 600 level, the 400 level. It may be a level right here that you have to find and draw a line, and you see, oh, the tick is honoring this level. And then as you see the market come back there, the tick honors that level. So it could be different levels throughout the day, but more than likely it'll be the levels that we have on our charts that are showing those levels right there. All right. So that's how you're going to be able to use this. Again, let's look at some more opportunities. This time we'll look at bearish opportunities. So the market now, the market's not honoring the 0. So you would think like, okay, since it's honoring the 0 level, since it's going above the 0 level, we are bearish. All right. Sorry, I said that wrong. Since we are going above the 0 level, we're probably bullish. You might think that, but you have to look at everything in context. So first of all, the market's honoring this 600 level. And if we look down here, it's honoring this negative 600 level. So every time it hits this 600 level, there's a trade opportunity. And you could see that. All right. Because every time it hits that 600 level, it also comes into my 920 zone, my 920 zone, my 920 zone. This one was a little different. I'll explain that in a minute. My 920 zone, my 920 zone. Now this one right here, what happened was you had this move right here. Then the market pushed off of the negative 600, but it was unable to close really above that 0 level, and automatically it came next candle, showed more downticks in the market, more supply coming into the market. So I would take a trade right there, which would have been here. Now the way that I want to really catch these trades and to keep my risk small is to catch the trade inside this zone with a stop loss above the moving average, and then my entry as close to the lower moving average as possible. If I take the trade way down here, I just increased my risk when I could have taken it way up here, right? But sometimes you're going to have to take it like that because you want to be sure. So maybe like this trade would have been perfect, and you could be slightly above, not as much risk. You have more risk on this trade than you do on this one. So you have to decide if it's worth the risk or not. If it's too much risk and you can't trade that, you'll have to decide that and determine that as you trade. All right. Now, here's some more opportunities. This would have been a hard opportunity because the two moving averages were pretty flat. So you probably wouldn't have taken that trade. and maybe not even this one, but you could tell this was a correction right here. But you probably definitely would have taken this trade, and this trade looked a little different. Just again, the market tick closed below the zero level, and that's what I was looking for here, and it maintained that. All right. So how do I get this tick up? I'm going to show you the way to bring the tick up is if you do this. Let me take you to another chart here and show you exactly how you get the tick to come up on your chart. So the way you're going to get this on your chart, you can just look at this chart by itself and compare it to what you see on your chart, or you could do a couple things. So one way would be to really just have this come look at for it in the search symbol, and you're just going to put in tick, and we put in tick for the ES. You'll use this one here where it says index. All right, so if you're trading the ES, you want to use this. If you're trading the NASDAQ, you want to use this one here, tick Q. So all you got to do is put in tick Q, brings that up, and that's the one that I'll be using a lot because I trade the NASDAQ more often than the ES. If you're trading the Dow, you could use just the regular tick. All right, so that's how you get it. Now, if you want to put it on your chart, have two charts, then all you got to do is separate your charts, really. So just separate your chart, put a bottom level. And I would have the tick down here. I would put the tick down here, and then I would have my chart up here, like let's say it's going to be NQ. I'd have them switched though, but I'm not going to do that right now. Just showing you what I do. So now you can compare it, right? So you could see I have the 920, and I can compare it. All right, and that's how you do. Now I don't like it this way because, like, see, it doesn't line up as good. You got to make sure everything's lined up. So you got to come in here. When you select the layout, you got to make sure everything's lined up. And it is, but it still doesn't line up as well. So therefore, I don't do it like that. I'll show you what I do. All right, so I'm going to go back to the other charts and show you exactly what I do. So looking at this chart right here, you could see that this bottom indicator is going to be the tick. Now, how do I get that? So all I'm doing now, I'm actually using the actual indicator. I'm not using the index that's coming from the symbol search. All I'm doing is now searching for the indicator. So when you go to indicators on your trading view chart, search for indicators, put in NYSE, NYSE, and then space tick, T-I-C-K. And the bottom one will be by a Guy Wallace, and that's the one you want to take. And then you want to change it so that it looks like this. All right, some things you got to change as far as like background and stuff. I don't put the background on there. I believe I changed my colors, green and red, more defined. And then you could put your levels in. Now I also use another tool called the background zones to have these in my chart. All you got to do is search indicators and go background zone. What it's going to do, it's going to put it up here. Just move it down to here, and then have the everything line up to your right side, and then just put the zones in that you want. You can have it looking just like that. So now all I'm doing is looking at this one chart, and now I could see what's going on. So again, I could see my trades. This was a short opportunity, and you could see the market already, the tick already showed me right here what was going on. And then you could see the market drop, the tick dropped, and the market dropped. Here I'm looking for a long because we got this crossover. The two moving averages are green. This is my 920. It came back to my 920 zone. I'm looking for a long. The tick already told me that we were having positive upticks coming into the market. All right, so we're seeing more demand coming into that market. And then boom, here's your trade. You're up in the trade. And I also would look at volume also. And here's another opportunity. This pullback. Now this one might have caught me here also. I might have caught this and lost. But then it gave me another opportunity right here. And with this opportunity, you could see we pulled all the way down to this level that the market was honoring. So the tick was honoring this level, pretty much this negative 400 level. And every time it got there, it bounced. It bounced. But the bounce weren't important over here. So this level wasn't relevant to me because we were going down. Maybe at that point I could talk about taking profit. All right. But what I was more relevant for was when it started going this way upwards, and this was now support right here, and this was support. Two areas of support that line up, and we're able to take a long trade based off the incoming tick value, which shows more upticks coming into the market, more demand coming into that market. Look at your volume, look at your level, you're good to go. Same thing here. And then as the strength got stronger for the move to the upside, the market now starts to honor this level, a little bit higher than the 0 level. So maybe a positive 200 level. You could start to see it honors that level now. So you could look at for a trade right there. You could look for a trade right there. You could look for a trade here. And you probably look for a trade here. All right. So you would catch these trades as the market moves higher. And that's how you're going to look at that. And that's how you're going to be able to catch these trades. So you're going to be able to catch these big moves in the market prior to the moves happening. And let me prove that to you right here. This is the best case right here. Here we have the 920 moving average, and now it's a little zone because it's colored in. So I'm using like the rainbow color move here. And right here where you see this taking place, that's where you see this tick coming, down ticks coming into the market as it hit this level, this 0 level. From this far left all the way over to here, the market was never able to break that 0 level, giving you plenty of opportunities to trade the market short off of this level. All right. And so here it comes right up to the 0 level, right where we want it. This is probably end of the day right here. Big move to the downside. You would take your trade right at this level, stop loss slightly above, and then you will catch a big trade, well over 2 to 1, more like 5 to 1, if more than that. All right. But you can see how big that move is, and that's the end of the day move, and you catch it by looking at this NYSE tick. Let me go back here. So this is now, I'm showing you another way to use this, not using the 920, but just support and resistance. And what we have here is the volume profile support and resistance levels. This is going to be my value area high, my PLC, and my value area low. The market pushes up to the value area high. It's hanging around that area. More than likely, I don't take this trade until I realize here. And at that point, the tick already dropped down. But you could see what the tick was showing me. But this one I do take because now the market dropped down, pushed right back up to the value area high, was unable to break that level. And here, a negative tick came into the market. A big red candle indicating negative ticks coming into the market. More down ticks are coming into the market. More supply coming into the market. You take that trade. All right. Again, the market moves up to the value area high. As it does that, look where the tick moves up to. So previously, the tick already was showing us with this candle here that there's more down ticks coming into the market. But then right away, we matched that. But then right at this resistance level of the value area high, right? This value area high, VAH, I'm not going to write it all out, but that's the value area high. We found resistance when this candle closed way down here, indicating big supply coming into the market. We take the trade, stop loss slightly above. We try to shoot for the PLC level, all right? Because more than likely the market's going to go from value area high to PLC, from PLC to value area low, and so forth. All right, just a quick synopsis of it. But you can see what you get, and you're catching that big move. And there's no way that you're going to catch some of these moves that I've been showing you unless you have something to show you. Like we go backwards, right? If we go back and look, this trade right here, how are you going to catch that big move? By the time you decide to take that trade, if you even do, first of all, what's stopping you is this, believing that this is support right here. So you're waiting for a break. So maybe you take it right at the break, or you get down here, but you're getting more risk. The farther you get down, you're increasing your risk. This already told us when to take the trade, well before it closed below the support level. All right. And then the market continued to drop. the farther down you take that, the higher your risk is. And maybe it doesn't go down anymore. It pulls right back up. So you would not catch this whole move like this if you weren't using something that could really help you to catch it. And I just showed you what it is. It's the tick, the NYSE tick. All right, so that's what's helping you to catch these moves if you decide to invest your time and learn it and understand it. All right. And so here's again, we could see basically where the market was unable to maintain a high above this value area high here. We closed below the zero level right here, and we're able to take the trade. The market moves to the downside. Could see some more opportunities. Again, the same thing, value area high, value area high, value area high, honoring that level, able to take trades off of that level and catch big moves. You're not catching this move unless you see something like this. This tick already showed me this was happening on this green candle. This tick was already red. This tick level showed me a red at an extreme level. The extreme levels on this chart are the 1,000 level, all right, and the negative 1,000 level. We're already at the 1,000 level. More than likely, we see a reversal. What helped us to understand that was we had the value area high. We had a close below the previous candle low. Definitely take that with a stop loss above. You catch that big move in the market, all right. Again, the same thing. You can see we were honoring this level, and what the tick was doing, honoring this 600 level. All right, so it honored this 600 level as the market honored the value area high, gave you a down tick, and then you take the trade. Same thing over here. All right, and then right here, this big trade. Now, I don't know for sure if you would catch this trade, but if you just base it off of what you're looking at with the tick, you would have caught this trade because this is showing me rejection. Maybe I don't have a level that I'm trading, but I could see what's coming into the market at that time. And then boom, look at this, what comes into the market. This candle closes, or you put an entry below this level, stop loss slightly above. Now this wick could have taken you out if you did that. But if you wait for this candle to close, you might get it here. Increased risk though, but it was a big trade, catching these big moves off the market. Look at where the value area low was right here. And look where we came off of the negative 1,000 level with green uptick. Well before the market even showed us that. The market did show us a rejection, but the tick showed us that we were having more upticks than downticks, and we take that trade. Look at what would happen there. So big moves you're able to catch in the market just by understanding that. And then again, you could see off of the value area high level, have this indication from more downticks showing us coming into the market, and we take the trade. So here's a trade that I took. I'm going to explain why I took this trade. This was a supply and demand zone where I took this trade right here. I entered the trade here and got out right here. I was looking to get out right at this level here. The reason I took the trade, now this, I didn't catch this trade. So I'm looking at two charts. This is my entry chart off of Quant Tower. There was another trade up here, right here in this area. That was going to be this right here. But the trade I took was this right here off of my demand zone. And when I look at the chart, it was this one right here, the trading view chart. You could see how price came back into my zone right here, and then boom. Actually, I should have been, I think I'm right on time here. Could have been a little earlier, but you could see what the market does. And I traded on this chart. When I look at trading view, I could see what's happening. Market's inside my zone, and I see everything that's happening. And then when I look at what happened with the tick at that same time, that first trade where I entered, the market was honoring the zero level, and I'm able to take a trade because the tick was now positive. And then the second trade that I missed, which was going to be up here somewhere, which was right there actually, which would have been right here. I didn't take the trade, but here's what the tick was showing me at that time. All right. So I took another trade here, shorted right here and got down to this level. Was really trying to get down to this point. Sometime I take my profit quickly, especially this market's so spiky. Let me show you why I took this trade. The market was maintaining a little bit above this zero level, slightly. Here you could see it honored the zero level, but it had a big rejection, and then you could see what happened. This is where I entered. If we back up, that's where I am. All right, this is the one candle where the arrow is, and this is the candle where I entered, which would be, this is the candle, and then this is where I entered. All right, and this is the tick again. Looking at the tick, I'm looking at the tick chart. I see this. I see that the market's been honoring this zero level, slightly went above and rejected. And then I'm also at a level of resistance on my chart. I take the trade. I'm in the trade. All right, now here's another trade that I took. I'm going to show you this one. This one was a supply and demand trade where I had this nice demand zone here, and I was expecting a big move to the upside. Really didn't get that, but see, you could see where I entered the market and where I took profit. But again, I had that demand zone. Here's where the candle was rejection, where I entered the market. I had a slight drawdown, and I got profit up in this area. I was expecting a bigger move, but that didn't take place. Instead, it went the opposite way, but I caught some profit. And what I was looking at also at that time was the tick was moving to the upside. We found support here, and we had support at the value area with the market. All right, so therefore I knew I could take this trade right here in my demand zone. Now, I had that strong support as I suggested. Let me show you the trade. So this is the chart where I took the trade. Okay, so I'm not going to sit here and show you the whole trade. I did show you where it was, but you could see I did enter the market here, and I did go into the drawdown, and then the market pushed up into this level right here, and I took my profit. Like I said, I was expecting a much bigger move, but I didn't get that. All right. So again, another opportunity right here. All right, market's honoring this level right here, and the tick is holding this zero level. So I'm able to take a trade. This was another live trade that I took. Again, I can't really hold on and show you because we'll be sitting here much longer as we wait for this to go. But you could see I entered the market and made profit. All right, so basically the tick is a short-term indicator. It provides real-time, instantaneous, moment-to-moment data, making it highly responsible to immediate market moves. And that's why we're trying to catch these market moves. It's primarily used for day trading. It's very volatile. The data changes frequently. And like it says, frequent changes in volatility make it unsuitable for long-term trading. So therefore, that's like I just said, you won't use it for long-term. You could use it for 1 minute, 2 minute, 5 minute, 10 minute, maybe 15 minute, 30 minute, you're starting to get a little too long, right? All right, so the tick is a leading indicator. All right, since it measures the real-time difference between the number of stocks trading up ticks and down ticks, this is an immediate snapshot of the market sentiment. All right, it reacts immediately to upticks and downticks. So here we go. Look at this level right here. Look where this trade is taking place. I always teach people to box this market in when it starts to do this. So you box it in, and then whichever way it breaks is usually the way it's going to go. But in this case, the tick was already showing me this right here because the tick was honoring this level, right? It couldn't break above that level, and the market couldn't break above this level. So at the same time, when I get a rejection candle, I'm going to take that trade short, and I can put my stop loss slightly above this level, even above this level if I really want to. Whichever one is going to be more suitable for my risk management. But then look what happens after looking at that. Boom, market drops big time. Again, we're looking at a resistance level. Look what the tick is already showing me. Had you paid attention to that, look what the market does, drops hard. Again, another resistance level. Look what the tick is showing me, big down ticks. Already before the market even turns, and the volume still hasn't even shown this yet. And then look what the market does. Not as big of a move, but you get some nice profit. Again, big rejection at a resistance level. Market comes on an uptrend, hits resistance. Look what the tick does. The tick is failing to break above that 600 level. So like here, couldn't stay above that 600 level. The market dropped. Again, approached it again, came right back at it and couldn't stay above it. We dropped and look what the market did. Big move, really big move this time. All right, so that's how it's going to help you. Again, we're at support this time. Already the tick is showing me more upticks coming into the market than downticks. Let me know that we have some demand coming into the market. Remember, this is immediate demand that we're looking at. A little bit short term, so we want to be able to catch that immediate short term demand coming into the market. Sure enough, we catch it. All right. So the last thing we're going to talk about is tick divergence. All right, so I'm going to talk to you about divergence. I'm going to show you bullish divergence and bearish divergence. We're not going to talk about hidden divergence at this time. So let's look at the chart. So what we see on this tick right here is the market's moving to the downside, the tick's moving to the upside. So the market's making lower lows, but the tick is making higher lows until it finds support at this 600 level, negative 600 level, and the market is finding support at this level, and the market moves higher. Here's a better example because the market's still pushing down, making lower lows, sorry, and then the tick is making higher lows, but at this more like the negative 400 level, it finds strong support. Look at your volume coming in. You could catch that trade to the upside. Again, another one, as the market comes off of this value area high down to this POC, you could see the market's making lower lows, but the tick is making higher lows. And finally, the tick gives you an opportunity, showing you right here as it develops and moves higher, especially where it closed above the zero level. You could have been in that trade and caught profit. Right here, I'm going to show you again the market making higher highs, but the tick's making lower highs. The market gets up to this value area high, and look what the tick does. And then look what the market does. Well, actually, you could see what the market does. Boom, drops right on down. All right, and we're going to look at another opportunity here. What we have here, the market's making higher highs, the tick's making lower highs. You can see the market drop. Market's making higher highs, and the tick's making lower highs. And then the market finds resistance at about this this positive 600 level, and the market's unable to break this level, and then it drops. That's how this tick works. So guys, basically I showed you everything you're going to need to know about the tick. If you see what I showed you, take that into consideration, put it on your chart, try to learn the movement of the tick. Try to keep it on your chart and learn it, because when I first started it, it looked like a bunch of mess to me. It was hard to really trade, but I started to realize how to use it, how to find the support and resistance levels, and how to make it relevant for my trading. And that's where it is now. It's very, very strong in my trading right now. So again, if you guys want to trade with me, you could come to my website. Basically visit my website, as you can see right here, thetradersvibe.com. When you go there, just again, go into the events section, our free event section, whichever one. If you're a member, you'll go into the events. If you're not, you'll just go into free events, and you'll see the charts. Like this calendar, you'll be able to use this calendar, as you can see, to come to one of the events that are marked on the calendar. And as a member, you'll see this. It'll list everything and tell you exactly what's going on. And again, use my Bullinox code Chaos90, and that'll get you a 90% discount. And I believe Bullinox is much, much better than Apex. And then again, if you still want to stick with Apex, here's the Apex code you can use. ZRZHFEXM. I ask that you use these codes. Help me out. And again, in this description section of this video, you will find a link to both of these also. But I ask that you help me with that, because the reason being, guys, is that I'm not charging anything for anything I do, really. I do have courses, but I don't promote my courses. What I promote is my videos on YouTube, hoping that you guys can learn from them. The time that I put into the market, even if you're just basing it off of the time that you see my videos from 13 years ago, you can understand that I do have the knowledge to show you how to trade the market. All right, guys. Hopefully that helps you out. And until next time, guys, have a great one. God bless. So long.